Joining us from Capitol Hill, Oregon Senator Jeff Merkley, member of the Senate Banking Committee, who supports Dodd's plan for regulatory reform. Senator, what do you like the best about what you think Senator Dodd's going to roll out today?
Well, certainly we're going to see a significant, strong Consumer Financial Protection Agency, which is time to get the tricks and traps out of the investment vehicles and the credit cards and the debit cards and so forth. But certainly, what we really need is to rewrite the rules of Wall Street, and that involves rewriting the rules for derivatives so you don't transfer risk from one firm to another, being able to take apart and dismantle firms that fail, so we do not have firms that are too big to fail, taking on systemic risk so that if we have something that, like what happened before, a 2-year explosion in subprime lending from 25% of the mortgage market to 75% of the market, somebody's paying attention and saying, what's going on? We need to rectify this. And so this is very important from so many angles. And as we talk about the overall economy, this is part of restoring confidence to investors in the American economic future.
One thing that has struck me, and I haven't seen what Senator Dodd is going to come out with, do you have any sense of whether, in fact, the derivatives market, that swaps market, that crooked insurance market, as I like to call it, where I'm basically assuming the risk of your default on your home payment, or I'm assuming the risk of the oil prices going up at my bank, but the problem is I collect the premium, you get the cheap insurance, and when the you-know-what hits the you-know-what, the taxpayer pays the bill. There's been a lot of resistance to moving that insurance market into public, pushing those derivatives onto an exchange, because the banks are hugely profitable by being able to sell these things behind closed doors. What efforts are you able to make, and are politicians able to make, against banks protecting as much as 80% of that multi-trillion-dollar crooked insurance market still being kept in secret?
Well, I am interested to see the details of the bill that Dodd's going to bring out, but we need to move at a minimum. We need to move to clearinghouse, and I think there's a very strong case to be made to move to an exchange. Not only is it going to result in folks being able to buy those derivatives to hedge their risks at a much cheaper price, going to significantly reduce the gambling that takes place by folks who are not even hedging. They're speculators that are driving this market. We need to have some ability to provide space for end users, but it has to be clearly defined in a way that does not transfer risk onto others and does not create a loophole that you drive the whole market through.
Yeah, I mean, the one thing with the so-called end user, which again is the electric company, the heating oil company in Maine, the food company, those companies, because the taxpayer paid 100 cents on the dough, beautiful payoff by the taxpayer, I must say, they benefit from a taxpayer subsidized insurance and have actually been lobbying, I don't know whether they lobbied you specifically, but I know that they have been lobbying Congress in general to try to keep these things off of an exchange, because they want the benefit of that cheap, crooked insurance that they're buying from the banks. The banks win, I win as a power company. The only loser is the taxpayer, and who cares? Screw the taxpayer.
You know, it's a very interesting puzzle, because end users, if there is an effective exchange and a transparent market, are going to be able to hedge at a much lower price. So why they have significant pressure, if you will, in incentives to keep advocating for the status quo is a bit of a puzzle. But by having that exchange and getting in place, until 1993, we operated on an exchange with derivatives. It worked very well.